Question 1. Which of the following principles of insurance is primarily concerned with ensuring that the insured does not profit from a loss, A. Utmost good faith, B. Insurable interest, C. Indemnity, D. Subrogation? Answer: C. Indemnity. Explanation: the principle of indemnity ensures that an insured person is restored to the financial position they were in before the loss occurred, without allowing them to profit from the loss. This principle is crucial in insurance because it helps to prevent moral hazard, where individuals or businesses might cause losses intentionally to benefit from their insurance coverage. Utmost good faith requires both parties to act honestly and disclose all relevant facts. Insurable interest refers to the financial stake a person has in the insured property, which must be present at the time of loss to claim insurance benefits. Subrogation allows an insurer to recover the amount paid to the insured from a third party responsible for the loss. Question 2. Mr. Davis, a licensed insurance producer, has been approached by a client who is interested in purchasing a new life insurance policy. The client is uncertain whether they should choose a whole life insurance policy or a term life insurance policy. As an insurance producer, what is Mr. Davis' primary responsibility in this situation? A. Recommend the whole life insurance policy as it is more profitable for the producer. B. Encourage the client to purchase the term life insurance policy as it is cheaper. C. Provide a recommendation based on the client's needs and objectives after gathering relevant information. D. Advise the client to choose the policy that has the lowest premium regardless of coverage type. Answer: C. Provide a recommendation based on the client's needs and objectives after gathering relevant information. Explanation: Mr. Davis, as an insurance producer, has fiduciary duty to act in the best interest of the client. He must assess the client's financial goals, family needs, and other factors before recommending policy. Whole life insurance policy offers lifelong coverage and savings component, whereas term life insurance policy is cheaper but only provides coverage for set period. The ethical duty here is for Mr. Davis to tailor his recommendation to meet the specific needs and financial situation of the client, not to promote policy that is more beneficial to him personally. This reflects his responsibility under both the Insurance Code of Alaska and industry ethical standards. Question 3. Which of the following factors is least likely to affect the underwriting process for a life insurance policy? A. The applicant's age. B. The applicant's occupation. C. The applicant's health history. D. The applicant's preference for specific insurance company. Answer: D. The applicant's preference for a specific insurance company. Explanation: the underwriting process involves assessing the risks associated with insuring an applicant. The factors that are typically considered include age. Older individuals may face higher premiums due to increased risk. Occupation: high-risk occupations might lead to higher premiums or exclusions. Health history: pre-existing conditions can increase premiums or lead to exclusions. However, the applicant's preference for a specific insurance company is not a factor that influences underwriting. The underwriting process focuses primarily on factors that directly affect the applicant's risk level. Therefore, while an applicant may have preference, the insurance company will base their decision on more relevant factors such as health, age, and occupation. Question 4. Which of the following is true regarding the concept of insurable interest in an insurance policy? A. Insurable interest must exist at the time of policy issuance but is not required at the time of loss. B. Insurable interest must be present at both the time of policy issuance and the time of the loss. C. Insurable interest is only required at the time of policy issuance, not when the policy is enforced. D. Insurable interest is only required if the policyholder is the beneficiary of the insurance policy. Answer: B. Insurable interest must be present at both the time of policy issuance and the time of the loss. Explanation: for an insurance policy to be valid, the insured party must have an insurable interest in the subject of the insurance at both the time the policy is issued and when the loss occurs. Insurable interest refers to a financial stake in the property, life, or well-being that is being insured. For example, a person can insure their own life or a property they own, but they cannot insure someone else's life or property unless they can prove they would suffer financially from its loss. This is essential in preventing gambling on insurance claims, and it is a key concept in insurance law. Question 5. Which of the following is a primary characteristic of a health maintenance organization, HMO, health insurance plan? It covers a broad range of health services from out-of-network providers. B. It typically requires members to select a primary care physician, PCP, and obtain referrals for specialist care. C. It offers no coverage for preventative care services. D. It operates under A fee-for-service model where each medical service is billed separately. Answer: B. It typically requires members to select a primary care physician (PCP) and obtain referrals for specialist care. Explanation: an HMO, health maintenance organization, is a type of managed care health insurance plan that emphasizes preventative care and typically requires members to select a primary care physician (PCP). A PCP, it says, a gatekeeper referring patients to specialists when necessary. One of the key elements of an HMO is cost control through a network of providers, and members must usually seek care within this network except in cases of emergency. Option A is incorrect because HMO plans generally provide coverage only for services provided by in-network providers except in emergencies. Option C is incorrect because HMOs typically emphasize preventative care, offering regular checkups, screenings, and other preventive services. Option D is incorrect because HMOs operate on a managed care model, not a fee-for-service model. Question 6. Mr. Thompson is purchasing a term life insurance policy and is considering options for how to structure the policy. He is primarily interested in affordable premiums and is unsure about how much coverage he truly needs for his family's future. What should Mr. Thompson do next? A. Purchase the policy with the lowest premium available to ensure affordability. B. Consult with an insurance producer to help him evaluate his needs and make an informed decision. C. Choose the highest coverage amount possible regardless of premium cost. D. Select whole life insurance policy as it offers both affordable premiums and savings components. Answer: B. Consult with an insurance producer to help him evaluate his needs and make an informed decision. Explanation: Mr. Thompson's situation suggests that he has uncertainty about his needs and coverage amount. Therefore, it is critical for him to work with a licensed insurance producer who can assist in performing a needs analysis to determine the appropriate coverage amount based on factors such as his family's financial situation, existing debts, and future needs. The producer will help him balance affordability with adequate coverage. Term life insurance policies are typically chosen for affordability, but they only provide coverage for limited time. Whole life insurance policy is generally more expensive because it offers permanent coverage and an investment component, making it less suitable if affordability is primary concern. Question 7. Which of the following is an example of unfair claims settlement practices under Alaska insurance law? A. Insurer delays the processing of claims to review the details further. B. Insurer promptly informs the claimant that they have completed their investigation. C. Insurer provides payment in full for a claim that has been approved. D. Insurer settles claims quickly to ensure a speedy resolution for the policyholder. Answer A. Insurer delays the processing of claims to review the details further. Explanation: according to Alaska insurance law, unfair claims settlement practices include actions like unnecessarily delaying the processing or settlement of claims. Insurance companies are required to handle claims in a timely and efficient manner. Delays can be a sign of a violation of the law, especially when the insurer fails to provide a legitimate reason for the delay. In contrast, Option B is permissible, as informing the claimant that the investigation is complete is a sign of good faith. Option C is acceptable, as providing the claimant with payment after approval is standard practice. Option D is also acceptable, as the insurer is acting in good faith to ensure the timely payment of claims. Question 8. When underwriting a life insurance policy, an underwriter will likely consider which of the following is the most important factor in assessing risk? A. The applicant's education level. B. The applicant's occupation. C. The applicant's age. D. The applicant's marital status. Answer: C. The applicant's age. Explanation: age is one of the most significant factors in life insurance underwriting, as older individuals generally have a higher risk of death, which increases the likelihood of a claim. The insurer uses this information to calculate premiums accurately. Age is a key determinant of life expectancy, and as people get older, they tend to pay higher premiums or face stricter underwriting requirements. Option A. Education level typically has a minimal impact on life insurance underwriting. Option B. Occupation may influence risk but is less significant than age in determining life expectancy and associated premiums. Option D. Marital status does not directly affect life insurance underwriting, although it can have an indirect effect on dependents or coverage needs. Question 9. Which of the following is true about the producer's fiduciary responsibility under Alaska insurance law? A. A producer must act in their own financial best interest when selling insurance. B. A producer must disclose all relevant information to clients and act in their clients' best interests. C. A producer must make insurance sales based solely on the client's ability to pay premiums. D. A producer can withhold pertinent information from clients if it benefits their own commissions. Answer: B. A producer must disclose all relevant information to clients and act in their clients' best interests. Explanation: under Alaska insurance law and ethical standards, an insurance producer has a fiduciary responsibility to act in the best interest of their client. This includes full disclosure of all relevant facts and offering recommendations based on the client's needs, not the producer's personal benefit. Option A is incorrect because the producer must prioritize the client's interests above their own. Option C is incorrect because decisions should not be made solely on the client's ability to pay. The producer must evaluate the client's needs and financial situation. Option D is incorrect because withholding pertinent information or misleading the client would violate the producer's ethical duties and the law. Question 10. Which of the following types of insurance is specifically designed to cover damage or loss to an individual's home or personal property? A. Commercial property insurance. B. General liability insurance. C. Homeowners insurance. D. Workers' compensation insurance. Answer: C. Homeowners insurance. Explanation: homeowners insurance is the type of property insurance that covers damage or loss to an individual's home and personal belongings due to perils like fire, theft, or vandalism. It also provides liability protection in case someone is injured on the property. Commercial property insurance covers business-related property, not personal property or homes. General liability insurance provides coverage for bodily injury or property damage caused by the policyholder to others. Workers' compensation insurance provides compensation for employees who are injured on the job, not for damage to personal property. Question 11. Which of the following best describes a coinsurance clause in a property insurance policy? A. A clause that ensures the insurer pays the full amount of any claim. B. A clause that allows the insurer to share liability with the policyholder for claims. C. A clause that requires the policyholder to insure the property for at least 80% of its value. D. A clause that eliminates the deductible from the claim payment process. Answer: C. A clause that requires the policyholder to insure the property for at least 80% of its value. Explanation: the coinsurance clause in property insurance requires the policyholder to insure their property for a minimum percentage of its replacement cost, usually 80%, 90%, or 100%, to avoid a penalty in case of a partial loss. If the property is not insured for the required percentage, the policyholder may receive a reduced payout in the event of a claim. Question 12. Which of the following is a characteristic of a universal life insurance policy? A. Premiums are fixed and cannot be adjusted. B. It has a flexible premium structure, allowing policyholders to increase or decrease their premiums. C. The policy provides only temporary life coverage. D. It does not accumulate a cash value. Answer: B. It has a flexible premium structure, allowing policyholders to increase or decrease their premiums. Explanation: a universal life insurance policy offers flexible premiums and an adjustable death benefit. Policyholders can increase or decrease the premiums and adjust the coverage amount within limits. It also builds a cash value that earns interest, which the policyholder can use to pay premiums or increase the death benefit. Question 13. In an auto insurance policy, which of the following is typically covered under collision coverage? A. Theft of the insured vehicle. B. Damage to the vehicle caused by hitting an animal. C. Damage to the vehicle from a car accident regardless of fault. D. Medical expenses resulting from an accident. Answer: C. Damage to the vehicle from a car accident regardless of fault. Explanation: collision coverage covers damage to the insured vehicle resulting from a collision with another vehicle or object, regardless of who is at fault. This type of insurance is usually optional but recommended for vehicles with a high value. It does not cover damages caused by theft, vandalism, or natural disasters. Those would be covered under other types of coverage. Question 14. What is the primary purpose of umbrella insurance? A. To cover expenses for business-related property damage. B. To provide additional liability protection beyond the limits of standard insurance policies. C. To insure personal property against theft and vandalism. D. To provide coverage for a policyholder's life insurance. Answer: B. To provide additional liability protection beyond the limits of standard insurance policies. Explanation: umbrella insurance is a type of personal liability coverage that provides additional protection over and above the limits of standard policies like auto or homeowners insurance. It helps cover legal costs, medical expenses, and other liabilities that exceed the limits of primary insurance policies. Its coverage is useful in the event of large claims, such as those involving significant bodily injury or property damage. Question 15. Which of the following is true about liability insurance? A. It covers damage to the insured's own property. B. It only covers bodily injury caused by the insured party. C. It provides protection against claims of injury or damage to others. D. It is required only for business owners, not individuals. Answer. C. It provides protection against claims of injury or damage to others. Explanation. Liability insurance provides coverage for the insured party in case they are found legally responsible for causing injury to others or damaging someone else's property. This includes both bodily injury and property damage liability. It is commonly included in both personal and commercial insurance policies. Question 16. Which of the following is the most likely consequence of committing insurance fraud? A. The policyholder may receive an increased payout for their claim. B. The insurance company may cancel the policy and report the fraud to authorities. C. The policyholder may receive a refund for all premiums paid. D. The insurer will raise the premiums of all policies for the customer's family. Answer. B. The insurance company may cancel the policy and report the fraud to authorities. Explanation. Insurance fraud is illegal and can lead to serious consequences. If an insurer identifies that a policyholder has committed fraud, e.g. submitting a false claim, they can cancel the policy, deny the claim, and report the individual to law enforcement authorities for potential prosecution. Fraudulent activities can also result in criminal penalties and substantial fines. Question 17. What is a deductible in an insurance policy? A. The amount of money an insurer must pay for a claim. B. The portion of a claim that the insured must pay before coverage kicks in. C. The difference between the policy's coverage limit and the actual cost of a claim. D. The fee charged by the insurance company for processing a claim. Answer. B. The portion of a claim that the insured must pay before coverage kicks in. Explanation. A deductible is the amount of money that the policyholder must pay out of pocket for a covered claim before the insurer begins to pay. For example, if the deductible is $500 and the claim is for $2,000, the insured will pay the first $500 and the insurer will cover the remaining $1,500. Question 18. In a health insurance policy, preventive care typically includes which of the following? A. Treatment for chronic conditions. B. Routine checkups and vaccinations. C. Emergency room services. D. Cosmetic surgery procedures. Answer. B. Routine checkups and vaccinations. Explanation. Preventive care refers to health services designed to prevent illness or detect problems early before they become serious. This includes services like annual checkups, vaccinations, screenings, and counseling to promote healthy living. Preventive care can help reduce the overall cost of healthcare by addressing issues before they require more expensive treatments. Question 19. Which of the following is a type of permanent life insurance that provides both a death benefit and a savings component? A. Term life insurance. B. Universal life insurance. C. Accidental death insurance. D. Health insurance. Answer. B. Universal life insurance. Explanation. Universal life insurance is a type of permanent life insurance that provides a death benefit and includes a savings component known as the cash value, which earns interest. It allows the policyholder to adjust the premiums and death benefit amounts within certain limits. In contrast, term life insurance is only for a set period and has no cash value. Question 20. Which of the following is the purpose of subrogation in an insurance policy? A. To transfer the insurance policy from one insurer to another. B. To allow the insurer to collect payment from a third party responsible for a loss. C. To reduce the deductible for policyholders who file a claim. D. To pay a claim before the policyholder has made a payment. Answer. B. To allow the insurer to collect payment from a third party responsible for a loss. Explanation. Subrogation occurs when an insurance company pays a claim on behalf of a policyholder and then seeks to recover the amount from the third party responsible for the loss. This ensures that the responsible party or their insurer pays for the damages rather than the policyholder or their insurer. It helps to keep insurance costs lower for everyone. Question 21. What is the primary function of underwriting in the insurance process? A. To calculate the premium rates based on the insured's risk profile. B. To approve claims once they have been filed. C. To issue payment for claims after approval. D. To determine the amount of insurance coverage needed for each policyholder. Answer: A. To calculate the premium rates based on the insured's risk profile. Explanation: underwriting is the process by which insurance companies evaluate the risk of insuring a person or asset and determine the appropriate premium for coverage. Underwriters assess various factors such as age, health, occupation, and claim history to decide the pricing and conditions of the policy. Question 22. Which type of life insurance policy allows the policyholder to adjust the death benefit and premiums? A. Term life insurance. B. Whole life insurance. C. Universal life insurance. D. Accidental death insurance. Answer: C. Universal life insurance. Explanation: universal life insurance is a type of permanent life insurance that offers flexibility in both premiums and death benefits. This flexibility allows policyholders to adjust the amount of coverage and premium payments as their needs change over time. It also builds cash value. Question 23. Which of the following best describes replacement cost in property insurance? A. The amount it would cost to repair or replace the property at current market prices. B. The original purchase price of the insured property. C. The cost to repair property using the same materials and methods used initially. D. The amount the policyholder can receive for the damaged property in a settlement. Answer: A. The amount it would cost to repair or replace the property at current market prices. Explanation: replacement cost is the amount it would take to replace or repair an insured asset at current market value without considering depreciation. Unlike actual cash value, which accounts for depreciation, replacement cost ensures the property is repaired or replaced with materials of similar quality. Question 24. Which of the following is true about term life insurance? A. It provides coverage for the policyholder's entire lifetime. B. It includes a savings or investment component that builds cash value. C. It is typically less expensive than permanent life insurance because it only provides coverage for a specific period. D. It guarantees a payout regardless of whether the policyholder dies during the term. Answer: C. It is typically less expensive than permanent life insurance because it only provides coverage for a specific period. Explanation: term life insurance is designed to provide life coverage for a set period, e.g. 10, 20, or 30 years. It does not accumulate cash value, and the premiums are generally lower than permanent life insurance policies since the insurer only provides coverage for a limited time. Question 25. What is flood insurance typically excluded from? A. Homeowners insurance policies. B. Auto insurance policies. C. Life insurance policies. D. Health insurance policies. Answer: A. Homeowners insurance policies. Explanation: flood insurance is generally not included in standard homeowners insurance policies. Homeowners insurance typically covers damage from fire, theft, and some natural disasters, but it excludes damage caused by floods. Policyholders may need to purchase a separate flood insurance policy to cover flood-related losses. Question 26. Which of the following is an example of moral hazard in insurance? A. A person who drives recklessly because they know their insurance will cover the damage. B. A person who buys insurance to protect their property from theft. C. A business that installs a security system after purchasing insurance. D. A policyholder who increases coverage after experiencing a loss. Answer: A. A person who drives recklessly because they know their insurance will cover the damage. Explanation: a moral hazard refers to a situation where a person may behave recklessly or irresponsibly because they know they are protected by insurance. In this case, the individual may take more risks while driving because they believe their insurance will cover any damages. Question 27. Which type of insurance is designed to cover expenses associated with long-term illnesses or disabilities? A. Term life insurance. B. Disability insurance. C. Health insurance. D. Long-term care insurance. Correct answer: D. Long-term care insurance. Explanation: long-term care insurance is designed to cover the costs associated with long-term care needs such as nursing home stays in home care or assisted living. This type of insurance helps policyholders with chronic illnesses or disabilities that require extended care. Question 20. What is actual cash value (SCV) in property insurance? The amount needed to replace the property without considering depreciation. B. The market value of the property at the time of the loss. C. The amount of money paid out to the policyholder, including depreciation. D. The value of the property before any damage occurred. Answer: C. The amount of money paid out to the policyholder, including depreciation. Explanation: actual cash value (SCV) is the cost to replace or repair property minus depreciation. This means that the payout to the policyholder is reduced based on the depreciation of the property at the time of the claim. Question 29. Which of the following is typically covered by comprehensive auto insurance? A. Damage to your car caused by a car accident. B. Injury to other drivers involved in a collision. C. Damage to your car caused by fire, theft, or vandalism. D. Damage caused to your vehicle while driving under the influence of alcohol. Answer: C. Damage to your car caused by fire, theft, or vandalism. Explanation: comprehensive auto insurance covers damage to your vehicle caused by non-collision events such as fire, theft, vandalism, hail, or falling objects. It does not cover damage resulting from car accidents, which is typically covered by collision insurance. Question 30. Which of the following describes the concept of risk retention in insurance? A. Transferring risk to another party through insurance. B. Reducing the impact of a potential loss by using preventive measures. C. Accepting responsibility for a portion of the risk by not purchasing insurance. D. Pooling the risk among many policyholders to reduce individual exposure. Answer: C. Accepting responsibility for a portion of the risk by not purchasing insurance. Explanation: risk retention refers to the practice of accepting some level of risk and choosing not to purchase insurance to cover it. This can occur when the potential loss is relatively low or the policyholder is willing to bear the cost of a loss rather than paying for insurance coverage.